Semiconductor giant Broadcom is acquiring VMware, and you're wondering, why does a semiconductor company like Broadcom want to buy a virtualization cloud computing company like VMware? Does that even make sense? Well, this could be one of the biggest deals of all time. It's a mega deal. I'm going to break it down for you in this video. I'm also going to provide opinions whether or not I think the stock is a buy now. You're going to want to see this one, guys. Stay tuned. So first, just a quick snapshot. Broadcom to acquire VMware for $61 billion in cash and stock. That's a huge deal. I'll talk about that more here in a second. Advance's strategy to build the world's leading infrastructure technology company with a track record of acquiring established mission-critical platforms. There's been pros and cons to their acquisition strategy. We'll talk more about that later as well. Now, what a lot of people don't know is that Broadcom has a software component to their business already. It's going to build that part of the business out and expand that, enabling greater choice and flexibility to build, run, manage, connect, and protect applications at scale. Brings together two engineering-first, innovation-centric cultures with shared focus on innovation. So, of course, this document's going to paint the picture of how it aligns and it works well. This has to get through antitrust, so there's always a chance that this could get turned down. They expect this to close in FY 2023, of course, subject to approvals. This has been approved by both boards, but now it has to get approved through antitrust. So, transaction details: $61 billion in cash and stock. So for each VMware share, you can get $142.50 cash or 0.252 shares of Broadcom. So following closing, the Broadcom software group will rebrand and operate as VMware. So Broadcom already has a software group. What comes to my mind is CA Tech. That was the reason I bought this stock back several years ago when they made that acquisition with CA Tech. And I think there's a lot of opportunity for these companies to kind of come together. They're going to rebrand and operate as VMware. So you're going to see that name around still. If this gets approved, Broadcom will just simply own the VMware name, and that Broadcom existing software group will roll up into that. Now, here's a quote from Hock Tan. Now, he's the CEO of Broadcom. Building upon our proven track record of successful M&A, this transaction combines our leading semiconductor and infrastructure software businesses with an iconic pioneer and innovator in enterprise software as we reimagine what we can deliver to customers as a leading infrastructure technology company. So they're calling themselves a leading infrastructure technology company. And you think of semiconductors, the new oil, that's infrastructure in their mind, and cloud computing is infrastructure in their mind as well. So businesses need both of those to operate, to survive. We look forward to VMware's talented team joining Broadcom, further cultivating a shared culture of innovation and driving even greater value for our combined shareholders. Now, this is a really cool slide. Broadcom continues to outperform. It goes back to November of 2016, and it's comparing NVIDIA, ASML, Apple. You can see on your right, the S&P 500. Broadcom is up 275%. Outperforming Amazon, Alphabet, NASDAQ, Oracle, Cisco, Meta, Alibaba, of course. NVIDIA has smoked everybody, and then ASML, Apple, Microsoft, and Adobe. But you can see on this chart here, there are different acquisitions. So the CA Tech that I talked about, I bought this stock. The ticker is AVGO. It has a nice dividend. We'll talk about that here in a little bit. This was back in 2018. That's when I bought it. And then they also have acquired Symantec, and they paid a lot of money for these acquisitions. And you can see they really haven't done a big mega merger acquisition since 2019, 2020. So it's been a couple years trying to get this one approved now. Now, this is going to be one of the biggest deals of all time if it gets pushed through. So they're buying, again, $61 billion. Once done, deal would be one of the largest technology acquisitions of all time, behind Microsoft's pending $69 billion deal with Activision Blizzard, and then Dell's $67 billion purchase of EMC in 2016. Elon Musk's offer for Twitter at $41.3 billion would be in third place. So this is a huge deal, and a lot of you might not know maybe what Broadcom is, or especially VMware, because VMware is going to be much more of that older legacy, lower multiple type of a tech company. You think of like an Oracle, an IBM, those type of companies. So if you aren't familiar with Broadcom's existing semiconductor business, they make chips for modems, Wi-Fi, Bluetooth, multiple devices. So you think cars, gaming consoles, computers, medical devices, Internet of Things, right? So VMware, which was owned by PC maker Dell, was spun off last year. It focuses on cloud computing and virtualization technology. So this next part is really important if you're a dividend investor. It's one of the reasons I own the stock. Think of it more in the DGI type bucket. Broadcom expects to maintain its current dividend policy of delivering 50% of its prior fiscal year free cash flow to shareholders. So if this deal gets approved, they're expecting it to be completed in Broadcom's fiscal year 2023. This next part here talks about how the global shortage for semiconductors has been a catalyst for the CEO of Broadcom, Hock Tan, to expand his revenue into other areas of the business. A lot of people don't realize how important the software component is already to Broadcom, and this is really just going to expand that area of their business out further. It's going to diversify the company. And some people will say, stay in your lane, don't over diversify. Diversification. I think in this case, it actually does make quite a bit of sense. There are some synergies there. I know that's going to be hard for a lot of people, especially analysts look at it and say, does this really make sense? But I do think they can make this work. They've made crazier things work in the past with some of their acquisition history. This will help the company diversify away from its core business of designing and selling semiconductors into enterprise software, which can have larger margins. Of course, that helps a lot too. Software's got great margins. VMware's products are used by enterprises to more efficiently run their own servers as well as cloud servers. They have more than 500,000 customers and counts all the major partners, including Amazon, Microsoft, Google. The proposed acquisition would make Broadcom a significant player in cloud computing. Now, this company has bounced around. This will be the third owner since 2004. So if you think about it, they're still the number one in virtualization software. This here says 72% market share and revenue of $5.9 billion, according to Gartner. However, it has been slowly losing relevance to containers, open source software, and public cloud technologies. It's a very competitive space. It's also facing significant competition from Red Hat, Nutanix, and other hyperscalers on different fronts. This makes it obvious that VMware needs to expand beyond its virtual desktop infrastructure, VDI. So if you're familiar, that's really their bread and butter in endpoint management space, to either transform itself into a full-blown experience management company or up its security investments and position itself as a security-first vendor for its anywhere workspace solution. Under Broadcom, VMware may finally get the stability to shore up a business that's been underperforming. I personally think that they're going to do exactly this. They are going to try to really up the ante and beef it up and take their existing security software that they already have with Broadcom, and they're going to push more into the security space. That's just my guess. That's just my hunch. I think that would be a good move. When you think of cybersecurity and just security in general, it's a huge growing space, huge TAM, and there could be a lot of opportunity for them in that vertical, in that space. So we talked about some of those acquisitions already, but $5.5 billion. Then they had the CA Tech that I talked, $19 billion in all cash, 2019. Symantec, $2.5 billion enterprise security business. So they're already in that security space and trying to beef that up. Whopping $10.7 billion there. So, lots of money in these acquisitions. That's really their growth strategy has been through M&A, not so much organically. Broadcom actually tried to buy Qualcomm. If you're investing back in 2018, this was all the news, all the buzz on CNBC and everywhere else. It was the drama, like the Elon Twitter of now. It's Broadcom. Broadcom, and you think of Broadcom and Qualcomm, they've both been kind of dramatic and in the news together for several years. But back in 2018, Broadcom was trying to buy Qualcomm for $117 billion. Of course, the government shot that down, antitrust. Michael Dell currently is the largest shareholder of VMware with a 40% stake, and he's already approved the acquisition. So this is really going to come down to antitrust. In a statement supporting the merger market, Michael Dell said, together with Broadcom, VMware will be even better positioned to deliver valuable innovative solutions to even more of the world's largest enterprises. This is a landmark moment for VMware and provides our shareholders and employees with the opportunity to participate in meaningful upside. So of course, he's all in, he's going to get paid, and he's made some great moves in the past. He doesn't get enough credit for some of the things he's done. VMware customers could be concerned, especially if Broadcom follows the same playbook where they essentially abandon customers, they raise prices. There's a lot of, anytime there's acquisitions, there's always going to be complaints, it feels like, with that, right? But massive price hikes, worsening support, stalled development. I used to work for Oracle, and it was the same way. We would grow through mergers and acquisitions, and the more we acquired, the more people you would kind of fire along the way. You try to have to take all these people and put them into one talent pool, and sometimes it's oil and water. And it can cause problems. Now, the good thing for Broadcom is they haven't had an acquisition now for a few years. So I think the timing could be right. And I think the synergy here, when I look at the employee base and I just look at where each of those are headquartered, it makes a lot of sense from the leadership and development team. And there's some synergies and crossovers with those different teams. As of right now, there's no competitive offers, but it wouldn't be surprising to see an Amazon, Microsoft, Google, or even a Cisco, maybe they'll actually bid this up. It's hard to say, but you can make arguments of why VMware would make more sense than one of those other companies, especially Amazon, Microsoft, or Google over Broadcom. Let's dig a little bit more into VMware, the platform powering the modern enterprise, it says here. So VMware, by the numbers, $12.9 billion in revenue, 37,500 employees. A lot of people might be surprised at how large the company is, 37,500. They have 111 offices worldwide, headquartered in Palo Alto, California. And you look at this, they've got the cloud infrastructure, so the core private, they've got next generation with the multi and hybrid cloud DevOps, and then they got the security and edge. Revenue by geography, it's actually 52% international, which a lot of people might not understand or realize either, and 48% US. So there's more international business than US, which I wouldn't have guessed that myself. So they're really this virtualization pioneer. So you think of physical servers in the data center, phase 2, private cloud and mobility leader, and phase 3, multi-cloud and apps platform. So this is where they think that the two companies align together strategically. So that established and growing market. So virtualization is a large and foundational market, leadership position in private cloud infrastructure and complementary product portfolio, mission critical, saying that you basically need this for the businesses to operate. Large enterprise customer base. We talked about some of this earlier. Here's what it would look like if you put it together. So creating one of the world's leading infrastructure technology companies. So post Broadcom acquisition, so this is 2017. So Broadcom, FY 2021, $27.5 billion. Add VMware, pro forma, $40.1 billion. And you can see semiconductor solutions, about 51% of the business, and then infrastructure software and VMware would be 49% of the business. So it would literally be a 50-50 split. Half the company would be focused on semiconductors, half would be focused on software and cloud. So workloads are growing everywhere. And you think of private clouds, public clouds, they do hybrid, multi-cloud. You can see the private and then the public cloud and that compound annual growth rate from 2020 to 2024. So decent growth there. We talked earlier about cybersecurity, Carbon Black. So you got Carbon Black over here, so security and edge. They got Workspace ONE, Horizon, Carbon Black. That's a cloud security platform providing endpoint. A lot of people don't realize that. So Carbon Black would be endpoint security competing with SentinelOne, CrowdStrike, Microsoft, and so on. They also have the Secure Access Service Edge. So that's on the right-hand side. In the middle, you've got next generation multi and hybrid cloud DevOps. And then on the left-hand side, you have core private cloud infrastructure. This is another good slide here. So the bottom right, cloud, you see that IaaS, that's infrastructure as a service. Everything from Amazon, Microsoft Azure, IBM, Google Cloud, Oracle Cloud, so on. And then you've got above that applications, you got the VMware Cloud Foundation. So that's going to have management, storage, compute, network. On the left, you've got applications, everything from automation, hypervisor, and then you've got the compute and software virtualization here on the bottom, and that's compute, network, and storage. So that kind of paints a picture of what they're trying to grow. That's your data center stack on the left, and then you've got the cloud foundation, the public cloud stack on the right. So here's the flywheel, putting it all together. You can see on your screen, but we always like these flywheels. So securely enabling the application lifecycle for the modern enterprise. So here's the transaction overview. I'm not going to read through all this. If you want to see it, I want to put it on the screen. You can pause the screen, but it's $61 billion. Assume $8 billion of VMware net debt. So that's important to understand. They're committed to a strong balance sheet and investment grade rating, and they're committed to keeping that dividend like we talked about earlier. So on that dividend front, maintain target of returning 50% of prior year free cash flow as dividends. Continue growing dividends per share over time. So this is important as cash flows increase. So DGI, dividend growth investing, increasing that dividend. This is still going to fit in that category, at least based on what their strategy is right now. The debt retirement and target leverage ratio. So committed to a strong balance sheet, investment grade rating, plan to rapidly delever and normalize leverage ratios. So they want to get those down within 2 years of acquisition. Maintain Broadcom's share authorization buyback of $10 billion. So they're going to keep that as well. That was announced in 2021 in December. Repurchase 4.7 million shares for $2.8 billion. They've already done that. And 11.7 million shares for $7 billion to date. So there's $3 billion left that they're committed to on that share buyback plan. And the company's board of directors has actually authorized a new share repurchase program. And that's going to be for up to $10 billion of common stock through the end of December 31st, 2023. So 10 billion plus 3 billion, there's $13 billion on the table between now and the end of 2023. I want to reiterate the dividend because a lot of you own the stock for the dividend. You can see on the left-hand side, that's 41% compound annual growth rate. And the dividends, you can see 43% compound annual growth rate. This is from FY16 to current. So that's good. They want to sustain and grow those dividend payments. You talk about delever, get rid of that debt. They're showing here that they've proven to do that with their other acquisitions, and they've gotten those numbers down over time. We showed this earlier, but the stock has outperformed significantly. You know, the NASDAQ, over double the NASDAQ, 122% of the NASDAQ. The S&P, it smoked it, 275% to 88%. And these guys pay a higher dividend. I'm going to break that down here in a second. Okay, so I'm going to break this down real quick, and then I'm going to give you my opinion on the stock and where I might buy the stock. So right now it's pre-market and it's the 28th of June, and Broadcom, ticker AVGO, is trading right around $505 a share. It pays a 3.22% dividend yield, which is a very solid yield. According to Fidelity, the PE, the TTM, is a 25.07. So it is a little bit expensive maybe, and you saw it's kind of run up. If you look at a chart, it doesn't look too bad. It looks like it's getting pretty washed out. Now I want to look at a 2-year chart to kind of see what it's done. And you can see that back here we had 2020. This is the end of 2020. I actually want to go to a 5-year chart here. So it got below $200. March 2020 pandemic, it's ran from $200 to $500. So you could argue that this is still pretty expensive, that you might want it to come down a little bit. But if you like that dividend yield and you're a DGI investor, you might be okay paying, $500 a share because you're getting that 3% dividend yield. I think if the stock can get lower, if it can get in the 400s, especially like $450, I think it'd be very, very attractive. If you can get that PE ratio maybe to 22. I mean, if you can get under 20, even great, that's probably not going to happen. But if you could get it down at least under 25, closer to maybe 22, get it somewhere in the 400s, maybe 450, 400 to 450, I think that's the sweet spot for Broadcom. I do actually like this acquisition. It's a $200 billion market cap right now, $204 billion. I think it's expensive. A lot of times when you have these expensive acquisitions, one that comes to mind is Salesforce CRM. They acquired Slack, and it feels like the stock's never really recovered from that. So this is one where it could take a long time for the market to digest it, to accept it, to figure it out. There's always risk with this because that acquisition, number one, it might not go through, which some people would maybe cheer because they don't want it to happen. Or it could go through and there's going to be risks on how those businesses, those cultures are going to survive and commingle. So you're going to always have that management risk, that employee risk, and that's something that is always hard as an investor to know exactly how it's going to work out. I think it is important to understand that Broadcom does have that software business already. So it's not like if they're just a semiconductor company that has no experience in software and they're just going to go buy VMware. They do have experience in software. They've already got an existing footprint and they're trying to build off that existing footprint and diversify. I think it actually could be a very, very solid play for Broadcom. I do own some of this. I've had it, since 2018. I've done pretty well on the stock, and I'll continue to monitor it. I might even add some if it gets to the right prices. So this video was sponsored by the Motley Fool. If you want to see the 10 best stocks to buy now, visit fool.com/firedupwealth. It is important for you guys to understand that Motley Fool is not telling me what to cover or what to say. I'm independent. These are all my opinions. And essentially I have a partnership with them that I can produce content, help get it to more people, and they compensate me for that. So it brings more videos to YouTube for free for you to enjoy. Understand that there is no conflict of interest. They're not telling me what to say or what stocks I have to cover or anything like that, okay? So I appreciate your time and attention. If this video is helpful, drop me a like, drop me a comment. If you haven't subscribed to the channel, do that now, hit subscribe. I appreciate your time and attention. Hope you have a great rest of your day. Take care.